In this video, we're going to use price action rules to help us identify directional bias of the market and to help us identify right places on the chart where to enter. So as a price action trader, number one, I need to analyze the overall structure. And number two, I need to locate the correct key entry point. So number one, the structure is basically pretty much bullish. The supportive indicated 1 bar EMA keeps pointing up. We have a series of high highs and high lows. And most of the times, we're going to locate the right trend line by connecting the first two swings at the start of the move. And this is the point, the area where the uptrend started from. We have a first swing, second swing. We can connect these two swings, project the trend line, copy it, put it at the top. So the bias of the market right now is bullish. So we are buyers because we're going to make the most money if we're going to be focusing on with trend setups. So I want to take a high probability setup. We have a first entry long, but it's not a high probability setup just yet. Market moves in pairs of twos and the correction down was still in play. Break, new extreme, downtrend played out, which is great. And if we're going to get a break above this bar high, there's going to be a second entry long, the second attempt. Why? Because we need to get the new high following the trend line rule. So this right here would be great second entry long. The signal bar is mediocre, but when the context is clear, you can consider. However, there is no break above this bar high. So second entry long has yet to trigger, which indicates that the price action is stalling, and you have to ask yourself why. And generally, because we don't want to cherry pick, when this happens, we cancel the limit order and we will not really enter this. So unfortunately, even though it worked, it stalled, but you still want to study this because next time there will be a trigger. There's a clean second entry long, you need to get new high, EMA keeps holding. So we have new high, but even after new high made, market keeps working higher, which I want to pause looking to go long because we can correct, but notice we keep working higher and we keep working higher. And not only that, I can see some flatter geometric pattern right here, which can indicate possible spike in a channel. And why are we considering this? Well, number one, it looks great when it comes to market geometry. And number two, the uptrend can be strong because there is one clue that can help you identify the strength of this trend, and that is the fact that EMA kept holding right here. From the very beginning of the move, we never truly broke below EMA. While when the trend is weak, you're going to see deeper pullbacks, breaking below the EMA. So market is correcting. You can see a lot of small bars just working higher. And now we have new high first entry long, second entry long possibly. We broke lower, nice bullish tail reversal, and there is some triple test. Problem is when you're watching this live, the spike in the channel is not fully confirmed and you just had to break a new high. You like to see some setup at the key entry point to confirm it. So way more advanced, but if you are a more advanced trader, you can consider taking a second entry long because the downtrend played out, very small triple test, spike in the channel is looking nice. Your stop loss goes one tick below the single bar, high low, horrible doji neutral. It's getting quite stacked, so we can't really enter. Market keeps working higher. Correction phase ended, push phase started. Correction phase ended, push phase started. Now we have another two-legged pullback, new high, first entry long, pullback, second entry long. At the EMA, almost at the trend line, you can draw it just a tad steeper. So you have multiple key entry points. Great signal bar, your stop loss goes one tick below the signal bar. Small little scalp. If you held this for more than 2 points, you would have ended up being stopped out. But the ATR was very low today, so you can consider small scalps. Now, we broke lower, but what are you expecting? This trend was strong and you still expect new high for this spike in a channel. So you're not panicking. You're still thinking about long opportunities. What I was thinking about, I would like to see first entry long, pull back lower, and a second entry long multiple test from this support because EMA is flattening and we can see small consolidation has been established. So some second entry long multiple tests would be absolutely amazing because you want to have some room to buy low, but it never formed. There was just first entry long and market created a push up. We bounce off the resistance. Now, I don't think you can take a high low now because basically you have matching high. This is first entry long and you already created a significant move up, very close to being new high. So you gotta be careful when it is this tight. You want to make sure you're gonna wait your turn and buy at the bottom where the correction phase will end and the brand new push phase will start. So once again, I'm thinking about second entry long multiple test, but market already created a break and a new extreme. So even the secondary spike in a channel played out. So what I'm gonna do, I'm gonna pause looking to go long. At the same time, I'm not really thinking about selling because this was quite a decent uptrend from the very beginning of the session. So I would need to see some proven downtrend first, freeing itself out of the trend range before I'm gonna start considering selling. So most likely, we're gonna continue the consolidation because we traded up into this and the consolidation is quite confirmed. So let's see what's gonna happen. Break, new extreme. Okay, market moves in pairs of twos. One leg down, break, second leg down, downtrend played out. And here we have what it's called a second entry long fell breakout. Okay, because this is a new high, first entry long, second entry long, visual one too, and you broke below this trend range. Problem is, uptrend played out. Okay, uptrend played out, so you don't really know if there's going to be stronger pullback. The consolidation may not be 100% the next market cycle. Okay, had this second entry long fell breakout formed while this spike in the channel needed new high, actually would have been great setup, but because we already have a break in new high, you know, there can be some stronger pullback, you don't know. So, you know, it is way more aggressive. I can mark it if it's okay, because once again, it is only 1.75 ATR is low. So if you're gonna catch this, you can have some massive push up. So if you're taking a little bit bigger risk, no problem. Market keeps working higher. Can we stay above EMA to get a high low? No, we broke back below the EMA. So I cannot take high low above doji below EMA. But this is a good sign. Support keeps holding. And notice new high, first entry long, pullback, second entry long. And counting from the lows, this would be first entry short, pullback, second entry short failure. So we would have two reasons to go long. And because downtrend played out, even the tight one here breaking extreme, and the support keeps holding and we traded up. I was ready to go long here, but we need to see break above this bullish bar. We cannot go long above bearish bar. Remember, the signal bar is integral part of the setup. So we need to see break above bullish bar. It never formed, it is stalling. Okay, what's going on here? So I'm just going to be patient. Now we have another high low, and you can see how many sellers are getting trapped. You know, the support is holding so strongly. Downtrend still played out. You know, this leg up needs to get new extreme. So this is decent high low confirmation setup. You know, you can basically reset the count and treat it as a new high, mini first entry long, second entry long on a very micro level, but matching lows, high low here. And now we have new low, first entry short, pullback, second entry short failure. Now the support is definitely holding, sellers are definitely trapped, and this right here is a great felt second entry short, because remember, I'm going to zoom back, we traded up into this. So you have to combine the main and daily bias with the trend range rules. Want to buy low, sell high. We're not selling high because we traded up into this quite strongly. So you're going to trade up into this, focus right now playing the trend rules, and while the trend is over and you're establishing a consolidation, you're going to switch the trend range rules, buy low. Okay, so market keeps working higher. At first I drew my trend line a little bit wider like this, but we quickly broke below. There was no second entry long, so I'm going to adapt. And it makes sense because this is the second leg to this. Like you can see, one leg up, break, second leg up, and the first leg created a break in new high. So I'm going to draw a short-term downtrend working lower. We have overshoot. Okay, overshoot can lead to stronger correction, which looks like this is what is happening here. Now, because you can see this move retraced so much of the downtrend, actually felt second entry short would be a great opportunity because overshoot reversed the market. You're back in the consolidation, back with the main bullish bias. So new low, first entry short, no break below, no break below, no break below. Can get a felt second entry short? We can, but it's super far from the EMA. I cannot take this horrible felt second entry short. Market keeps working higher. Now there's a small break new high. Or if I'm gonna draw it wider like this, I have overshoot. Okay, you can see you have overshoot. So either way, I cannot really take this second entry long because I either have break in extreme or the wider channel has overshoot and the signal bar has a bearish body. So I can't really take it. Okay, we keep working higher. So this is a good clue why the market is not reversing lower. EMA keeps holding. New high. Okay, this is a lower high. I cannot take a lower high because we traded up into this. I would need to see a reversal pattern at minimum, and the lower high has a bullish body, so not good. Actually, we have a mini small break new low, and market keeps pushing higher. So this is important. What happened right here is telling you that the bullish bias continues, because if this consolidation, and you can see the consolidation is starting to be less static, less consistent. We're breaking lower here, we're breaking higher here, so key level is no longer coming into play as it did previously. So this is a sign, okay, it is whipsawing and it is getting more and more bullish. The fact that this downtrend didn't reverse all the way down to here, brand new downtrend didn't start. There's a break in new low and push above EMA. This is the pivotal point where the reversal failed. Push above EMA is indicating brand new bullish structure. So high low above EMA would be good. There is no high low. Of course, we cannot take it this far up, even though it worked. We cannot really cherry pick. We have to follow the rules. Next time we're going to take it. It may fail, so you have to be careful. Spike in a channel, and I can also draw bigger pattern like this, because there has to be a reason why, you know, we keep working higher. We trade up into this. Most breakouts fail. Reversal didn't happen. We keep trending to the upside. Now we have a second entry long, but problem is it's not really the EMA with the body, and there can be easily case made for the downtrend being in play. You know, had it at least been close to the EMA, you can make a case, but this is textbook scenario for double trap. Every single time when it's this far from the EMA, there's a stick higher, reversal down, stopping early bulls, double trap, and then going long on a high probability setup. So I believe, even though this spike in the channel is new high, it's better for us to be patient. And now we have overshoot, so we can have a stronger pullback in the opposite direction. You can see spike up. So I'm going to redraw wider downtrend working lower. Now we have double trap, which is very tempting, and honestly, if you took it, it would have ended up working for like 3 points. When I was watching this live, I wasn't sure if there's overshoot or not. I played it without the overshoot, but looking back, it makes sense, because when you're watching price action develop live, your first swing where you're going to anchor the trend line is this swing right here. And when you see such a massive bullish bar at the top of the move far from the EMA, there can be depletion. So looking back in hindsight, the overshoot is definitely more apparent. Downtrend is in place, so we think we need to wait for this downtrend getting a break in extreme, because overshoot can generate stronger pullback in the opposite direction. You have a break, new extreme, so one leg down, break, second leg down. Okay, now this uptrend needs to get new high. Downtrend played out, brought to a pullback, market moves in pairs of twos. Actually going long above high low here would be great. No trigger above this high low, so we're thinking about 1-second entry short. It never formed, and there is no pullback. You could have made a count reset here, but still I don't see good pullback to the EMA. Just nothing, no opportunity for us to go long. Enough with the EMA, and market created a new extreme, and now it's about to close. So this is the overall structure for today, yet I still want to talk about one setup because I missed this. We have high low here, which is actually where I have high low here. This is actually a decent setup. The signal bar, however, was neutral. Had it been much stronger, would have been better. But this is a high low confirmation of the double trap. You know, this is decent setup to consider. High low confirmation setup, but you can see the overshoot generate a stronger pullback. And once we have these broad two legs, this is where equal overshoot generated equal break for the most part. And you're looking for push above EMA, bullish resumption, and uptrend getting new extreme. So you can see there's a reason to price action, and at the very start you're playing the trend rules, looking for correction phase to end and buy when the push phase is going to start. When the uptrend played out, now you're going to apply trend range rules with the main bias. You want to look for opportunities to buy low. Okay, you can see the support was really established pretty much. At this point you can see how many sellers are struggling to break this important key level, which means you can take the other side of their orders. This is the first clue that the bullish bias is going to be strong. The fact that this downtrend cannot get a new extreme tested, overshoot reverse, it's a great sign of bullish momentum, and this was extremely pivotal. Break a new extreme and the push above EMA is a brand new sign of bullish bias. There's a bigger pattern and market needs to go higher. So slow price action for the most part. It picked up towards the close, where you can't really enter because we don't trade this late, but fairly predictable. If you are just focusing on long opportunities, you're going to do much better. Don't think about reversing too quickly. In a situation like this, you need to see some proven downtrend first, breaking out of the trend range to make sure, okay, the market reversal is there. I hope you had a good trading day. I'm going to wrap it up, and I'm going to talk to you next time. Good luck with your trading.